Okay, hi everyone. Brad Walchuk here with Premier. Welcome to today's webinar. We're going to go and talk about Home Care Secure, GTL. First off, I want to just thank you all for taking the time out of your schedule to join us today. I know that's always a hard time to get away either from the phone calls or the clients and join us, so we appreciate that. With us today, we have Liz and Nick that are going to be going over the product with us. GTL has a couple different products, but like anything, it's always best to have the right tool for the job. Home Care Secure offers a couple different aspects to their product it's great, including the issue age of 35 and over to the membership of Aging at Home Association. So we'll go ahead. I'm going to have Liz and Nick present this. You can go ahead and ask questions during this webinar. We'll be happy to try to answer those as they come up, and we'll open it up at the end for questions. With that, I'll go ahead and turn it over to Liz.
Great, thanks so much. Well, and greetings and thanks for the warm introductions. As Brad had mentioned, my name is Liz Christopher. I'm joined today by my colleagues Nick Polish and Tierney Beauregard, and we are thrilled to be with you to discuss an innovative solution which combines insurance with advocacy and navigation. Now, we like to tease all the time saying you don't usually associate innovation with insurance, but after today's presentation, we hope you come away with just that, right? A different way to think about insurance and a robust offering to enable your clients to realize their dream of aging at home as safely, as independently, and as long as possible. Now, before we get into the product details, we did want to provide a little bit of context and background on why we designed this solution offering. So all of our employees have either been a caregiver or have had to search for caregiver services, as I'm sure many of you and many of your clients have had to do as well. We know the majority of people want to age at home, now more so than ever, yet the emotional and the financial burdens can be overwhelming, not only to the individual, but to their families as well. I think all of us can attest to the fact that the healthcare system is disjointed and fragmented, but especially so within the short-term and long-term care spaces. And if you couple this with the misunderstandings and misperceptions of what Medicare will cover, it's no wonder that there's a problem. In fact, the average person will consume roughly $50,000 in unreimbursed custodial healthcare expenditures in their lifetime, most of which is not budgeted or planned for. It's a massive blind spot for so many, and one which results not only in having to make difficult decisions from where a loved one ages, but also to the quality, to the access, and to the type of care that they may receive. And on a very somber note, these expenditures are the primary reason that individuals file for bankruptcy late in life. And so that's what brings us today to our integrated solution, which is called Home Care Secure. And this combines an indemnity insurance product with navigation and advocacy supports to provide your clients with the tools, the resources, and the financial security to be able to age at home. Now, at a very high level, the indemnity insurance product has available lifetime maximums ranging from $20,000 to $60,000 in $10,000 increments. The benefits designed to pay over 50 weeks, thus leading to weekly payments ranging from roughly $400 up to $1,200. And because of the indemnity nature of the product, this money's paid directly to your client. Then if we move over to the right-hand side, you'll see the Aging at Home Association, which provides a robust set of tools, resources, and discounts that we divide into three main areas. So discounts and special values for frequently used goods and services, such as unlimited telehealth and durable medical equipment, care coordination services ranging from free online self-service tools to help you make a plan to age in place, up to discounted personalized services that are provided by a dedicated advocate who's trained in elder care. And then lastly, we also offer a voluntary annual well-being assessment that we developed in partnership with Fidelity Investments, which takes a holistic view of an individual in their areas of life, health, and money. So all of these elements work together to educate your clients on the emotional, the social, the financial, and the operational components to be able to age at home. And with that, I'll turn it over to Nick to provide additional details on the product.
Great, thanks, Liz, and good afternoon, everyone. So I'm going to spend a few minutes on this slide and address three fundamental questions. Who's eligible for coverage? What are the key product features, and how do individuals qualify for the cash payments? So let's work our way left to right. So first, from an eligibility requirement perspective, there are three requirements. First, your client must be entry age 35 through 84. Second, be a resident of one of the 22 states where Home Care Secure is currently available, and we'll take a look at the states in a moment. And then finally, be able to pass the 5-question simplified underwriting process. And passing is the ability to answer no to each of the health eligibility questions. And based on our experiences, 90% or more of your clients will be able to pass the test. From a key product feature perspective, so similar to other products in this category, Home Care Secure utilizes entry age pricing and is guaranteed renewable. So entry age means the rate is based on the applicant's age at policy issue, and it remains fixed for the policy, the life of the policy, unless of course there's a class-related premium increase, which no one's expecting or anticipating. Secondly, it's guaranteed renewable, which means that it could only be terminated for non-payment of premium. Now, as Liz mentioned, plan maximums range from a low of $20,000 up to a high of $60,000 in $10,000 increments. And recognizing that clients purchase these policies years before they anticipate needing the custodial home health care assistance, there needs to be a way with which the benefit keeps pace with wage inflation. So we have two mutually exclusive options. One is the inflation protection rider, and then the second is the $10,000 buyout. So let me discuss each individually. So first, the inflation protection rider. So that's a decision to purchase your client will make at policy issue. That's the time to buy it. The interest rate is 3% simple, and it begins to accrue in the 7th policy year. And there's no limit to the increase in the lifetime maximum while the policy is in force. So for example, if your client purchased a $50,000 policy with the inflation rider, after 30 years, the maximum will have grown to $86,000. Now the alternative is the $10,000 buyout. And the buyout is available every 3 years or more. However, it's subject to a lifetime maximum benefit of $60,000. So to continue with the example that I used for the inflation protection rider, your client with a $50,000 lifetime benefit that they purchased, they would only be able to buy up once, because then they will be at the $60,000 cap. In addition, it's important to note that the $10,000 buyout is subject to the same five health eligibility questions, based on the applicant's health at the time of the buyout, and the prospective rates will be based on the age, at the buyout, and then the new lifetime maximum benefit. Now, the lifetime maximum benefit grades over a 5-year period. So it starts with 10% in year 1, it grows to 20% in year 2, and then ultimately reaches 100% in the 6th and subsequent policy years. So what was the rationale behind offering this feature? First, it allowed for the simplified underwriting process with high acceptance rates and more competitive premium rates. And maybe more importantly, while none of us can predict our healthcare future, again, individuals generally purchase these policies 5 to 15 years or more before they anticipate needing the cash payments. And so in these situations, the grading schedule is effectively not applicable. And then the final feature I'd like to cover with you is the multi-episode of care. And the headline here is that Home Care Secure can be used episodically over a period of time for acute healthcare conditions. And one episode of care ends when the individual recovers, no longer needs home healthcare services for a minimum of just 30 days. So it doesn't use the benefit period approach. It's a lifetime benefit. Now I'm on the last column, claim qualification requirements. So basically 3. First is a licensed healthcare provider, which can be a physician, a registered nurse, or a licensed social worker. So one of those healthcare professionals must certify that your client suffers from either a physical or cognitive impairment. A physical impairment is the inability to perform 2 or more of the activities of daily living, such as bathing, dressing, eating. A cognitive impairment would be, for example, a dementia diagnosis. So that's criteria 1. The second criteria is that your client needs home health care services at least 3 times a week, and each home health care service is at least 1 hour in duration. And then finally, all of this is documented in a plan of care. And because of the indemnity nature of the benefit, as Liz mentioned earlier, the weekly cash payments are made directly to your clients, and they can use the money as they wish without restrictions. So let's take a look at a little geography here. Okay, here we go. Thank you. So the 22 states in green represent the states where Home Care Secure is available today. The states in gray with the abbreviations within their boundaries are targeted for introduction throughout 2024, and then the remaining states in 2025 and beyond. So let's take a quick peek at the application process and the underwriting questions, the knockout questions. And so while you're reviewing the questions, let me give you some highlights here. First of all, the process is incredibly simple. It yields real-time determinations at the point of application. And as I said, it's easily attainable. Note the health questions are very narrowly defined, and the look-back period is only 12 months. And as I mentioned earlier, based on the experiences we've had to date, 90% or more of your clients who wish to purchase Home Care Secure will be able to, honestly answer no to each of these questions. So with that, let me turn it back over to Liz to talk a bit about the benefits of the Aging at Home Association.
Great, thanks, Nick. So as we highlighted, we were very purposeful in designing both the insurance product as well as the association. So since we've either been in this position ourselves, either as a caregiver or having to search for caregiver services, we know how overwhelming the process can be. And in addition, with our experience in the insurance industry, we've seen far too often that people don't learn about their insurance, right? They don't understand their benefits and their levels of coverage, and they don't start looking into it until they're sick and at their most vulnerable. Thus, they're not usually equipped to make the best decisions. So we wanted to bring together the tools, the resources, and the navigational supports to help individuals and their caregivers in advance of their time of need, so they have increased peace of mind. And as part of this peace of mind, we wanted to ensure that our association provides valuable benefits and discounts that align with our mission to enable individuals to age at home. And the beauty about these benefits and discounts is they're available not only to the policyholder, but to their immediate family members as well. So to give you a little bit of an idea of what we're talking about with the association services, we offer things like free unlimited telehealth, again, both to the individual as well as to their family members, access to discounted care coordination that ranges from free online self-service tools up to discounted personalized care that's provided by a trained advocate. They can help with vetting care services, coordinating transportation, and they'll even help with reconciling medical bills. And then lastly, other discounts and special values for things such as durable medical equipment and estate planning services. So all of these elements can provide immediate value to your clients and to their family members and really assist with them being able to age confidently. So you're probably thinking, okay, with the insurance and the association, really, how does it all work? And so we'd like to introduce you to Retiring Ray, which is a persona that we created to bring these elements together and make them real for you. So Ray purchased the $50,000 policy with the inflation rider at the age of 65 for a monthly premium of $109.57. Now, I want to pause there for a moment to highlight that we were very particular about selecting this level of coverage for the example, because if you recall earlier, I had mentioned that the averaged unreimbursed out-of-pocket custodial expenses are roughly $50,000. And this is an expense that 2/3 of us will encounter in our lifetime. Now, if we fast forward, unfortunately, at the age of 80, Ray requires in-home custodial care, and he has to go on claim. So by this point, you can see Ray's made total premium payments in the amount of about $19,700. Yet if you look here, he has an available maximum benefit of $63,500, which reflects the original $50,000 policy plus the inflation rider, translating into payments of $1,270 a week for 50 weeks. And since Ray has been a client for 15 years, he's been taking advantage of all of his discounts and benefits through the association. So he's been taking his annual well-being assessment. He's been leveraging the available tools and resources. Ray and his family know what to expect from a benefit perspective. They have an aging at home plan in place, and now they're just executing on that plan with increased peace of mind. And with that, I'll turn it over to Nick to close us out.
Great, thanks, Liz. So from this point forward, we're going to talk less about Home Care Secure, the product, but in more of the ways to help you sell it. So first this is our who, what, where slide. So who's buying Home Care Secure? What are they buying, and where are they buying it? So first column, who's buying? So what we've seen to date is that the buyers skew slightly female, 57 to 43%. The age range of policyholders to date, our youngest policyholder is 42, oldest is 83, and the average and the medians are tightly compressed at age 62 and 61 respectively. In terms of what they're buying, over 75% of sales are either at the $50,000 or $60,000 lifetime maximum benefit level. And 70% of them are purchasing the inflation option, which aligns with the fact that most of the policies are, as I said, at that $50,000 or $60,000 level, where the $10,000 buy-up is of limited value in the case of the $50,000 max, or literally no value for someone who purchased a $60,000 policy at issue. In terms of where they're buying it, we've seen sales in all 22 states where Home Care Secure is available. And to date, 50% of the sales have been in 6 states: Texas, Illinois, Georgia, North Carolina, Arizona, and Ohio. And I wouldn't read too much into that. It's really, they're the most populous states. They've got favorable target demographics, and they have more practicing insurance agents within their borders. So let's talk a little bit about target buyer characteristics. So, clients will purchase Home Care Secure for a variety of reasons, including life stage, financial considerations, and personal experiences. And it's important to keep in mind that these are not silos, and your clients and prospects can possess characteristics in multiple categories. So let's take a look at a representative sample. So from a life stage perspective, people in their 40s have likely experienced a loved one, for example, it could be a grandparent or a parent, go through a physical or cognitive decline. And that's a very powerful motivator for them. Your clients that are in their 50s and through mid 60s, they're beginning to think about and plan for retirement and what that looks like for them. And then finally, those that are age 65 and older are considering care options as they age. From a financial consideration perspective, pretty interesting fact, 87 million households in the United States have investable assets of less than $100,000. Now, Liz shared with us earlier that the average person will consume $50,000 of unreimbursed custodial home healthcare expenses in their lifetime. So for the vast majority of Americans, retirement savings are insufficient to cover custodial home healthcare needs. So educating them on a potential gap in their financial plan and providing them with a cost-effective solution is certainly the right thing to do for your clients. And then finally, from a lifestyle expectation perspective, people have a strong desire to age independently, both physically and financially at home. It's always been a strong motivator, but even more so now that we're on the other side of that pandemic environment. In terms of use cases, let me provide you with 3 use cases. The first one is a pretty natural one, Medicare. And there's really 2 scenarios that slot under Medicare. One is individuals who are aging into Medicare for the first time, and those that are already on Medicare. So first, individuals that are aging into Medicare, which probably a fact that you've all heard a million times, is that 10,000 individuals every day in the United States age into Medicare. And chances are their monthly financial obligation for Medicare health coverage will be lower and potentially substantially lower, especially if they purchase a Medicare Advantage plan, than their employer-sponsored health care. It could be several $100s a month. So there's a great opportunity to educate your clients on the potential financial exposure of custodial home healthcare costs and redirect some of the healthcare premium savings to fill the gap with Home Care Secure. And then for those of you that have clients that are currently on Medicare, Home Care Secure makes a great reason to check in with your clients either just before or just after the Medicare open enrollment period. The second use case is the Affordable Care Act. So a couple of years ago, during the height of the pandemic, the American Recovery Act was passed, and that increased the premium and plan design subsidies for individuals who earn below 400% of the federal poverty level. In addition to that, it introduced for the first time subsidies for select individuals who earn in excess of 400% of the federal poverty level. And that was supposed to be a temporary bill that had a lifespan, I think, of 2 years, but it has since been legislatively extended for another couple of years. And the rationale here is essentially the same as aging into Medicare. There's an opportunity to, again, educate your clients on their potential financial exposure and redirect some of the savings. And the savings in this scenario effectively are the increased subsidies to fill the gap with Home Care Secure. And then finally, on the far right side, employer-sponsored benefits. So for those of you that work with group clients, if you've been following the trends and speak with voluntary benefit platforms, you know that the next big thing in voluntary benefits is quote unquote caregiver benefits. Just to give you some facts, 45% of employees have caregiver responsibilities. The annual cost to employers for full-time employees with caregiving responsibilities is in excess of $17 billion a year, and that works out to more than $2,400 per full-time employee. So offering Home Care Secure as a voluntary worksite benefit benefits everyone. So let's take a look at each perspective. If you're from the employer's perspective, not only are they offering a valuable caregiver benefit, it's not administratively burdensome. And what I mean by that is because Home Care Secure is not an ERISA plan, there are no Form 5500s to file with the Labor Department, no summary annual reports to complete and disseminate, no discrimination testing, no minimum participation requirements. And because premiums are paid with bank draft, either checking or savings, there are no payroll deductions to worry about and no one to notify should an employee terminate. From the employee perspective, it's a fully portable benefit that fills a significant gap in their financial plan. And then from your perspective as an insurance professional, each employee represents potential multiple sales opportunities when you consider, not only the employee, but their spouse, parents, and potentially in-laws as well. So here's your opportunity. So why introduce your clients to Home Care Secure? Well, opportunities for your clients and for each of you. Each of you are trusted business advisors to your clients. So here's an opportunity to reinforce that position by educating them on a potential gap in their financial plan and introducing them to a solution to protect their future and provide them with peace of mind. We understand that your time is your most precious resource. Thus, we designed Home Care Secure to be easy for your clients to understand. Just 2 decisions: lifetime maximum benefit, inflation protection option, yes or no, to affordable, experience high acceptance rates, 90% or more, and save time with an efficient enrollment process, which takes 10 to 15 minutes to complete. Now, as luck would have it, there's a bonus program. So Guaranteed Trust Life announced a couple of weeks ago a bonus program that runs from May 1st through July 31st. So I'll just make you aware of three important points as it relates to the bonus program. Well, the first one, again, is the period of time that sales qualify. So it's 5/1 through July 31st. Secondly, there's no minimum production requirement. So if you sell 1 policy that qualifies, you get $20. It's not like you have to sell 5 policies to qualify. So there's no barrier to the bonus. And then finally, not only does it include Home Care Secure, but it also includes a handful of other Guarantee Trust Life products as well. So hopefully this bonus program will get your juices flowing, and you'll be thinking about your clients and your prospects and who might benefit from Home Care Secure. So in terms of resources and support, so all of us, at Guarantee Trust Life and at Premier, we're all focused, on your success. And we've developed a number of consumer-approved marketing materials, such as an explainer video that's kind of entertaining and informative at the same time, product brochure, customizable postcard and infographic, and other assets to assist your marketing efforts. Additionally, we're fully leveraging Guarantee Trust Life's technology platform, which includes eApp, which is their online quoting and enrollment tool, and GT Link, which is their agent portal. So in terms of what's next, if you are contracted with Premier and appointed with GTL, congratulations, you are ready to start selling Home Care Secure at this moment. On the other hand, if you're not appointed with GTL or contracted with Premier, please contact Brad or Katie, and we'll get you contracted in the market as quickly as possible. So with that concludes our formal remarks, and I'd like to thank you for participating again, and I'd like to turn it over to Brad to see if you have any questions that we can address for you.
Hey, thanks. Yeah, actually, I didn't have any questions. I just want to appreciate your time, everyone, for joining us, and to Liz and Nick for the presentation. So, and as he said, if you have any questions, you want to go over some client cases, we'll be happy to go over those with you and find the best product out there for you.
Well, thank you, Brad. Thank you, everyone.
You bet. Hey, thanks, guys.
Thanks, everyone.